Hello everyone, today is Friday, September 11th, 2020. My name is Evan and welcome back to our weekly stock market analysis video. If you're new to these videos, welcome. We break our analysis down into two parts. In part one, we're going to review everything that went on this week in markets. So we're going to look at performance and internals and sectors, volatility, and really sort of pick apart everything that stands out and that happened this week. And then in part two, we're going to jump into the charts. We're going to put everything into context and look at those longer term trends and try and identify some opportunity looking ahead to the next week or two. So hopefully that sounds good to you. Let's jump into this week's action. Couple of the big takeaways here is that technology, basically the leadership of this market throughout this year, is continuing to remain heavy. It is still the underperforming of the sectors right now, and we are still seeing sellers kind of dominating the action there in tech, semiconductors specifically. Notably though, the VIX sold off this week, and so we had markets down, VIX down this week, something we're going to talk about in today's video. And we're seeing the dollar rise a little bit, kind of against a basket of currencies, but the dollar basically staying firm and adding to some gains this week. So with that, let's look at some of the performance here. If we look at the right hand column for just the equity market performance, we basically had down across the board anywhere from about 1.5% to 4.5% here in the Nasdaq. The Dow Jones was the best performer on a relative basis. And actually take your attention to international markets here. So ACWX, everything outside of the United States, held up pretty darn well, especially on a relative basis. So I know most of us kind of focus on the US markets, but be interesting to see if this continues here. Notable sort of outperformance on the week. Now, if we look at market internals, we can see that it was sort of a mixed picture, and getting some warning signs here, some increased sort of caution. We did still have, again, the Friday numbers are unsettled numbers, and because today was this week was a holiday, the Mondays are all technically Fridays values in all of these charts. So just keep that in mind as markets were closed on Monday for Labor Day. So as I was saying, what was I saying? The weekly values here were still positive here for the number of 52-week highs. NYSE, the cumulative AD line, was a net negative on this week. So when we look here at the longer term graph of the 52-week highs minus the 52-week lows, so this is looking back over 21 days, look at the flat line that's occurring right now. So this is basically the flattest period we've seen in this rally, or since kind of the rally had really begun to pick up steam in the past several months. This is basically now the flattest that we're seeing the advancing stocks hitting new 52-week highs. So in other words, the ship is starting to go the other direction, where we're getting less 52-week highs and or slightly more 52-week lows. I don't think we've seen the 52-week lows jump up all that much, but there's certainly just a lot less 52-week highs being made. So this is something we absolutely want to pay attention to. If this continues, or if this continues to go sideways, and really if it starts declining, is where you start to get into more uncertain water. I think going sideways can make some sense during market pullbacks. So we're going to want to keep an eye on this. If we look at the cumulative NYSE advancers minus decliners over the past 30 days, you can see here that we're almost back to sort of zero, which basically just tells us that the average stock over the past 30 days has gone nowhere in terms of up or down price appreciation. So another kind of sign there that things are getting a little bit weaker here as this pullback sort of continues. If we look at sector performance, we had everything red except for materials. Materials kind of notably for the second week in a row is at the top of the list. XLB closed up 1%, followed by industrials and utilities in the top three. And on the downside, we had energy, technology, and communication services rounding out the underperformers, down 3 to 6.5%. Volatility is interesting this week, and this is something I think we should all be paying attention to. The VIX curve here. So what we're looking at is the blue line is this week's VIX term structure, and then the orange line was what last week's values were. And you can see that as we just looked at, everything was negative on the week. However, volatility also declined. So, for instance, if you were out there purchasing, puts last week because you thought, the market was ready for some more decline, you were right in your directional assumption, but chances are you didn't make a whole lot, potentially could have even lost money on those options if you were trying to hedge via the options market. So the VIX declining here, it's under 30, it's trading at 26.64, it's historically elevated, but I actually consider this net constructive here. The fact that the markets could decline while the VIX is declining, and I know this is a big subject with lots of moving parts here. It's tough to really, there's lots of ways to hedge nowadays, and this is a very dense sort of instrument. But I think just at a high level, I would consider this net positive for the market that the VIX continued to fall. And again, I know we had the long weekend in there too, so there's lots of cross currents. Again, I'd love to hear your thoughts. Actually, the comments section has been picking up, and there's been a lot of good discussion going on there. So if you guys have other thoughts on the VIX and how you interpret this, I'd love to hear them below, and hopefully we can all sort of share some insights in the comments section. But I think this is a net positive here for the market. If we look at credit markets this week, not a whole lot going on. It was, basically a positive story as well. We're not seeing any big meltdown here in our credit market ETFs, so that is constructive. Equity markets are falling, credit markets are still functioning and seem to be, in good working order there. If we look at interest rates and commodities, we can see the yields were basically down across the board this week. So we saw bond prices rising, we saw gold up a bit, silver down a bit, and crude oil suffering some of the biggest losses it's seen in the past month or two. So all in all, we look at our report card here, and there wasn't a whole lot to really like. I do like, again, on a relative basis, the volatility environment, which is this fourth row here, but on a historical basis, a VIX at 28 is not something that's very nice. So report card for this week comes out to a D, and that's sort of what we're working with. Last but not least, if we look here at the positioning of the Merlin portfolio strategy that we trade here, you can see not a whole lot has changed. A little less technology, a little more biotech, healthcare exposure, and I think that's about it. There were some stop outs this week. There were new positions this week, so not a tremendous amount of change, still sort of enduring some of this pullback, and again, a pretty healthcare, biotech, tech-heavy portfolio. So that is it for part one. We'll be back in just a moment here with some charts. All right, here we go. We've got TC2000 open. We've got our equity market grid that we're looking at first here. The multicolored dots on each of these charts are a custom volume and price-based indicator that measure trend and trend strength of hours. Price itself are the white dashed lines, and we are looking at weekly time frames across the board. So at a high level here, on a weekly time frame, we still have the same exact outlook across all of these markets. The S&P in the top left, Nasdaq top right, Russell bottom left, ACWX, which is international minus the US, in the bottom right. And basically here on a weekly time frame, so looking at 3 months or more, 3 to 5 months or so of outlook here, this trend and direction and outlook is still positive, green, bullish. You can see trend filters are green in color, price is above all of them. We are pulling back to the trend filter, so it is potentially going to be under test in the coming weeks if we continue to see this market weakness continue. But as it stands right now, the outlook and everything is still constructive here on the longer time frame. Now, if we go into a daily chart, that's not the case. We got some transition here over the past week or two. We've seen the selling, start, of course, last week and continue through this week. And what we've observed here with our daily chart now, so our shorter term trend filters, is that we did transition lower into the neutral or bearish state, depending on which market you're looking at. Now let's look at the S&P first here. You'll see that we went neutral on Thursday of last week. That was the first day of selling. S&P went back into neutral territory. It stayed neutral Friday and Tuesday. Wednesday it went bearish, and Thursday it flashed back to neutral again. This is actually pretty hard to do. This speaks to some of the volatility here. The main benefit as I see these trend filters, certainly as with how they were designed in mind, is to reduce whipsaw and to reduce the noise. So it's actually pretty difficult to go from to ping pong like this, to go from yellow to red right back to yellow. It obviously can happen, but doesn't happen all that often. So it speaks to some of the volatility, some of the cross currents that are in this current area of price. Right now it's back to neutral. So it's back to those kind of mixed signals, trading range, choppy waters, and you have to either drill down to a smaller time frame to execute better, or you can always defer to the bigger time frame if that's how you want to interpret this. But right now it's basically saying there's some mixed action. Nasdaq 100 is basically the same here. So same pattern that developed here in the NDX. It went bearish on Wednesday, and then it flipped back to neutral Thursday and Friday. The Russell 2000 is not so lucky. So even on a relative basis, the Russell has been sort of holding its own, at least certainly relative to the Nasdaq and relative to some of these other markets. But notice here that it went bearish on Wednesday. It stayed bearish Thursday and on Friday. So the IWM really just is now in a sell signal, rolling over here on day 3. Again, the weekly chart is still bullish here, so you do have cross currents and mixed signals across time frame. Time frame matters. And ACWX here is in neutral here. It had a little bit of a whipsaw, but that's sort of the outlook that we have across all of these markets on the various time frames. So if we look a little closer now at just the candlestick price action analysis, we go down to our daily chart for the S&P 500, and we've talked basically about this 3350 zone. That had been kind of the important spot we wanted to see this market hold. We talked about that last Friday, where we had essentially the low from last Friday was right at this 3350. That was our line in the sand. That's where we would like to see this market stay above to continue to act as healthy and bullish as possible. And it just barely tried to do that this week. It violated it Tuesday. It bounced aggressively Wednesday. It sold off aggressively Thursday, and then it kind of just held in there and closed positive after trading down here on Friday. So it was a roller coaster week. It was a tough week of short-term volatility, and you could have easily got turned up in all the directions in which we traded this week. Ultimately, we are trading underneath this 3350, which was our general line in the sand that we used there. And, we have to be cautious. I think the sellers can easily just sort of tip the scales down here. The credit, there is credit to the buyers here of at least lifting us off the lows into the weekend. We didn't close at the dead lows. We saw that kind of happen last Friday as well. So notice the markets have been bouncing here into the weekends, and that's at least the second week in a row that we've observed this. So we'll see how markets open up next week. Clearly, they didn't open up too favorably for us this week. On Tuesday, had the big gap down and then an intraday sell-off. So this is a critical level, and again, I would say we're underneath kind of this 3350 now. If we can't come in here with some type of gap up and save this market quickly early next week, then I think the buyers are in trouble here a little bit in the short term. Has potential to sort of roll back to these older levels in here, 3140 or so. There's probably a good air pocket down here if we start to make another move lower, if we start to convincingly see this selling, continue / pick up early next week. then I do think we have room all the way down here. I'm not saying we have to get down here, but it's a 6% fall from where we're currently trading, so that would certainly put us at a high to low sort of pullback at about a 12.5% pullback, correction, whatever you want to label it, if we were to make it down to this area. So something to keep an open mind about. I think again, how we open next week will be important. If we want to start to save this market, it's over 3350 and ideally over 3400 to get us back over some of these old breakout levels, these old support levels, and to get this market sort of stabilizing. You can see that volume's been heavy. MACD moved into negative territory here. So at best, we're kind of sideways to uncertain here in the S&P 500, and at worst, we're getting ready for a potential second leg lower. So that's sort of the outlook there on the S&P 500. The IWM had a chance on Thursday to sort of save itself. It did transition lower here on Wednesday, which we talked about with our trend filter, and on Thursday it had this attempt to get back over 153. We talked about the bullish implications if the IWM could start closing back over 153 and get back in this range and kind of turn this into a false little breakdown. That didn't happen. So we attempted to, we held in there intraday, and then we rolled over and put in this bearish engulfing bar. So IWM below 153 is a sell signal, is continuing to be in a difficult spot. It did get some bounce here off of the lows, but really, for this to start acting better now, it's got to get over 153. It's got to take out these highs here from Thursday, close above them, and that would start to repair the damage. Until and if that happens, I think you have to be cautious here. Direction and bias is lower for the Russell 2000. If we go to the Nasdaq 100, again, we saw some volatility this week. We saw heavy selling day down on Tuesday. We saw this aggressive gap up and push up on Wednesday. Then we got the bearish engulfing bar Thursday, and then we got a mixed bag here on Friday. We did drive off of the lows, and we did close above the Tuesday lows. So again, that was constructive here in the very short term for the Qs, and it is holding above 265 to 268. This was sort of our mattress of support area that we wanted to see hold. So, on an intermediate term basis, the Qs are hanging in there, but they're certainly vulnerable. It's certainly not a very pretty picture here in the short term. It's just kind of scraping by. So you have to be careful with this type of positioning here. Again, depending on how the mood of the market, on how we open up next week, I think that'll dictate a lot. And if we start losing and taking out these lows and losing this 265 to 268 area, you got to be careful here in the short term for Qs on making a second leg lower. So that is really the outlook across the board. Lots of mixed signals out there, increased ranges, trading back and forth here. So you got to protect capital and be careful not to get whipsawed in either direction. Right now, there again is some mixed signals. Russell kind of clearly in a sell signal. Qs and S&P kind of just barely scraping by and holding on to these broader levels. So that's sort of the way we're framing out the market. If we go to some other markets, we look at credit markets here on a weekly basis. Credit's still holding up again. So credit looks good on a weekly basis. On a daily chart, junk is trying to stay in there. LQD investment grade has been in a bearish trend, for a few weeks now. So real no change there. Otherwise, not seeing a tremendous amount of outliers or, different movement here coming out of these two ETFs. If we look at the VIX in the bottom left, you can see coming back down to earth. It's printing now yellow. It went bullish for us back here on the 2nd. It has been kind of teetering off here and coming back down to this trend line. So the ideal case, the bull case now, is VIX continues to unwind and the S&P 500 gets and finds support around 3350, 3300. Same thing with the NDX. The VIX rolls over and, support around 11,000 is found, and these markets kind of develop a trading range rather than making second leg lowers. That is the clear sort of bullish case. We'll see if that plays out. I do like the fact that the VIX is back below 30 and on the decline. I think that is quite constructive. If we look bottom right here, TLT starting to shape itself higher and still battling this downtrend it's been in for the past month or two. If we go to commodities here, gold, silver, long-term trends still up. Daily chart, we're mixed here on gold. Same thing with silver. We're going sideways here. Both of these had big moves in June, July, and we're still kind of consolidating in both of the metals. USO had a big move lower this week, so this is bottom left. You can see, surprisingly, the weekly chart is still kind of hanging into positive territory, but the daily chart went into a sell signal on Monday, or I guess this past Friday, was when it went into its sell signal, and it proceeded to stay in a bear trend here on the daily chart throughout this week. Same thing with commodities. DBC is a pretty oil heavy one, and that is bearish trend as well. If we look at sectors on the weekly time frame, so longer term sector view here, most are still pretty constructive. In fact, we only have one that went negative here, and it's the XLE. The XLE broke trend on the weekly time frame, and it is now back to bearish trend. So let's talk about some of these individual sectors. We'll go to XLE first. Weekly chart, you can see what you sort of feared here is happening. We did go sideways in XLE, very tight and sideways for I don't know, about 10 weeks or so in this range, which really started back here with a support around 35, and you can see we're getting convincingly breaking down now and starting to roll back over after going sideways. So XLE weekly chart bearish, daily chart obviously still bearish here as well. It's been down pretty much consecutively, so it could see a little bounce reaction here. It did manage to close green on the session, but there's a lot of overhead supply, and oil's got to get its act together really quick if XLE is going to start shaping up. So XLE, the only clear sort of bear signal now in terms of sectors on multiple long and short-term time frames. Technology on a short-term time frame, so XLK. If we go to our trend filters, you can see this went to bearish trend this week on Wednesday as well. So basically, you can see XLK for the first time since recovering off of the lows here. So I think it was since March. The XLK has been bullish or neutral, and we're finally getting our first sell signal here on heavier volume. So that is obviously concern. It's the theme of all the videos that we've been talking about with technology lagging, and we'd like to see stabilization here again if that's going to repair itself, but I think right now I'd be more concerned about a second leg lower as being a likely scenario than anything else. If we look at IBB Biotech, it really hasn't changed character at all. It's basically just been kind of grinding and fading lower here for the past month and a half, frankly. If you look here just at volume itself, look at all the red bars in here. So it's just been bleeding lower here. And on a relative basis, it actually kind of held up this week. It didn't accelerate lower, and it's just kind of hanging out here, but it's in a bear trend. And right now that hasn't changed. It tried to change a couple of times in here into the end of the month, into the change of the month, but it really hasn't stuck. Healthcare is basically in the same boat now. It went bearish on Friday. You can see here this has gone sideways for a long time. It's starting to potentially break down. So XLV is a very vulnerable, dangerous spot here if momentum continues to spill over to the downside. Last but not least, and the only bullish one that we'll highlight today is XLB. This looks very different than everything we just looked at. So you can see we've got a clear trend to the upside. In fact, it's trading at all-time, well, it's just off of all-time highs, but it's pretty darn close to all-time highs. And the trend is up, and volume's been coming in, and it's been coming in mostly on the upside. So XLB materials acting well right now, seeing some rotation. I don't think materials by themselves are going to be able to save this market, but it's at least nice to see that some sectors are seeing some rotation, and it's not totally fleeing into other assets like bonds and gold. There is some rotation among stocks, so we'll continue to watch this. But XLB, and you'd want to be paying attention to the components underneath XLB if you're looking for more individual stock and trade ideas. So that's it. That is what I have for this week. So lots of action to cover, lots of movement out there, and lots of mixed signals. So again, try and stay solvent. You don't have to trade every day. All of those good sort of, nuggets of wisdom really come into play in times like these. And I'd love to know, as I mentioned earlier, what are you watching? Is there anything I missed or anything that you think is important that happened this week? Markets that you're watching for next week? Let me know in the comments below. I'd love to read them. And I think that's it. So have a good weekend. We'll see you back here next week.